More volatility, more uncertainty, more insolvencies. Folks, one thing is for certain. These are some crazy times we are experiencing, but we will endure them and prevail over them together. Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. This video is sponsored by NordVPN, a virtual private network service that protects our data while online. So more on them in a bit. Make sure we are all staying mindful of scammers out there in the space impersonating me and other people in the finance world trying to steal your money and your crypto. Never send money or crypto to anyone that claims they can make a profit for you or claims that they can help you recover lost funds. The only place we should be sending our crypto is from exchanges to cold storage hardware wallets to store for the long term. Never ever send money or crypto to anyone. So stay vigilant during these crazy times, crypto fam. Awesome. Let's hit Crypto This Week. As we've been discussing over the past few episodes, insolvencies are happening and will continue to happen as the crypto lending world sways under risk and turmoil. Crypto billionaire Sam Bankman-Fried says more exchanges will fail. There are companies that are basically too far gone. So this so-called crypto winter isn't over yet. And a number of cryptocurrency exchanges have already run out of cash. Billionaire and founder of crypto exchange FTX, Sam Bankman-Fried, said on Tuesday, "There are some third-tier exchanges that are already secretly insolvent," Bankman-Fried told Forbes. The 30-year-old's own fortune has taken a significant cut this year as crypto has crashed, but still sits at $8.1 billion, according to Bloomberg. And FTX has been on the front lines, extending credit to some and outright acquiring others in an attempt to stave off an all-out crypto collapse. Just this week, BlockFi and FTX agreed to a new credit deal and acquisition terms. BlockFi CEO Zach Prince tweeted this afternoon that the deal represents a total value of $680 million. An option to acquire BlockFi at a variable price of up to $240 million based on performance triggers is on the table, he said. The deal comes after rumors that FTX would acquire BlockFi for as little as $25 million. On Thursday, Prince took to Twitter to deny those rumors. Nevertheless, the struggling crypto lender has now signed a term sheet with FTX US that leaves room for an acquisition. And despite all the money FTX is throwing around, it does seem to have some standards, because they aren't bailing out everyone. FTX discarded Celsius deal after reportedly finding $2 billion missing from its balance sheet. FTX reportedly walked away from a deal with Celsius after discovering a $2 billion hole in its balance sheet. Celsius is currently looking to make strategic transactions to secure its assets. Ouch. Celsius isn't the only one whose fate seems to be pretty much sealed. Three Arrows Capital files for bankruptcy in New York, tied to British Virgin Islands proceeding. A British Virgin Islands court ordered Three Arrows BVI branch into liquidation earlier this week. The firm borrowed large sums of funds from several crypto lenders, including BlockFi, Celsius, Babel Finance, and Voyager Digital, but was unable to pay. Every week over the past several months, it's painfully obvious how much money all of these major players in the crypto business world were lending out to each other in an absolutely insane game of Russian roulette. By the way, speaking of Voyager, major crypto broker Voyager Digital suspends all trading, deposits, and withdrawals. And another one we discussed last week isn't doing as well as they thought they would be by now. Crypto exchange CoinFlex probably won't resume withdrawals Thursday as planned, says CEO. This headline sums up the current state of affairs. Crypto's domino effect is widening, threatening more pain. Losses are blowing holes in balance sheets and pushing firms in the industry to near bankruptcy. Even the biggest firms aren't safe anymore. The crypto crash exposes Robinhood and Coinbase to predators. A year can be a lifetime in the cryptocurrency world, as major players are reeling from heavy losses. A year ago, back in June, Robinhood Markets had a market cap of about $29 billion. 1 year later, that number was down to around $7.4 billion. Coinbase Global's market cap stood at $66.75 billion 12 months ago, compared with the current figure of $13.40 billion. At these valuation levels, the companies are at the mercy of any predator and fragile targets for a move towards consolidation in the sector. All in all, the situation is clearly dire. However, as we've been mindful of together on this channel, it's all about emerging from the ashes of this absolute massive dumpster fire of a bear market and macro environment at large as phoenixes on top of the next bull cycle. Until then, I'm with JP Morgan on this one, that there are better days ahead with crypto deleveraging coming to an end. A strategist at JP Morgan predicts that the worst of the bear market could be over, as stronger crypto firms have come in to bail out the industry in the midst of major deleveraging. Will it get worse before it gets better? Probably. As with each passing month, the Fed's actions feel more and more like a smoke and mirrors circus act than anything that will actually help the markets. So it's no surprise that people have finally started chucking tomatoes at them. Fed Chair Jerome Powell draws criticism for admitting how little we understand about inflation. Federal Reserve Chairman Jerome Powell erroneously stated in 2021 that inflation would be transitory. Wall Street Silver, a popular investing forum on YouTube and Reddit, tweeted, "Only the experts and the media didn't see this coming. Just about everyone else did." Wall Street Silver also highlighted how in 2008, the Fed Chairman Ben Bernanke predicted that there would not be a recession just before the Great Recession. The account tweeted, "The Federal Reserve is not currently forecasting a recession." Ben Bernanke, January 2008. And as fate would have it, history is unfortunately repeating itself. Yellen, June 9th, recession unlikely. Mester, June 19th, not predicting a recession. Powell, June 22nd, recession not likely. Bullard, June 24th, too early to have a debate about recession probability. Meanwhile, the Atlanta Fed July 1st Q2 estimate, negative 2.1%. That's right. If you've been tuning into previous episodes, we talked about the impending July 28th GDP reveal date, and how if the number turns negative, it will be the second consecutive negative GDP quarter, which is what a lot of economists use as the definition of a recession. And this week, the key Fed GDP tracker turned to negative, signaling recession is here. So both Wall Street Silver and the savage Finn Henrik are calling spades spades. Henrik points out in this tweet, every day Fed speakers insist on seeing no recession while the market, the consumer, and the data increasingly say otherwise. The Fed either looks clueless or to be outright lying to the public. Not a good look for an institution whose credibility is already shot. And they aren't the only institution whose credibility is shot, who just shot themselves in the foot again this week. The SEC rejected Bitcoin spot ETFs again. Now what? Well, crypto fund Grayscale launches lawsuit after SEC rejects ETF plan. The digital asset manager challenges rejection of the application to convert its $40 billion trust into an exchange-traded fund. And if you don't know the full story about the importance of the approval of Bitcoin spot ETFs, you can check out the video guide I posted for beginners by clicking on the link above. So even though Bitcoin just had its worst month on record, we still have a flurry of bullish crypto adoption stories to check out. Before jumping into it, a quick note about NordVPN. As a crypto investor, using a VPN is an easy, effective, and important way we can further protect ourselves and our investments. VPNs, or virtual private networks, prevent people, companies, and software apps from watching and tracking your online activity, which as a crypto investor can protect you when you're connected to public networks, as some hackers have ways to steal your data when connected to public networks. My personal favorite VPN provider is NordVPN. And if you use the link in the description area below, NordVPN is offering us their 2-year plan at a 70% discount with 1 month completely free, so you can try it out. This works out to be about $3.70 per month, the price of a cup of coffee, or probably what used to be the price of a cup of coffee at this point, with the benefits of protecting your privacy and your crypto investments. It's extremely easy to set up and very user-friendly, which is great whether you are a new or experienced person in technology. You can pay for NordVPN services in both fiat or cryptocurrency, so be sure to scroll down to the description area below to redeem their offer. Sweet. On to more lighter topics to wrap things up. Mark Cuban echoes something we explored together in a recent video, saying the bear market will last until crypto apps are actually useful. And if you'd like to learn what he means by that, check out my video guide all about how we should evaluate cryptos to assess which ones will survive the bear market by clicking on the link above. Cuban, the billionaire investor, said a bigger focus on applications and utility outside of finance would bring more back to the crypto space and possibly reverse the declining market. So if not finance, governments, enterprise, gaming, who will drive the next crypto bull run? With all the recent turbulence in the crypto space, the question of the moment is what will drive the next crypto bull run? It's definitely too early to tell, but we may have some clues. Ripple, The government of Colombia set to utilize XRPL blockchain for land registry. The solution has been implemented for Colombia's National Land Agency, Agencia Tierras, and is based on the XRP stamp, which enables digital assets to be registered on XRPL and their authenticity to be verified with a QR code. The solution hopes to register more than 100,000 adjudications in the short term to guarantee confidence for Colombians. Very cool. And another potential utility involves integrating blockchain-based digital IDs into daily life. Blockchain tech is pushing the boundaries of ID management as governments look for scalable solutions that promote privacy, control, and decentralized data management. The blockchain identity management market is estimated to grow by $3.58 billion in the span of 5 years from 2021 to 2025. Key factors include the rising demand for digitalization and privacy-respecting identity solutions. As a result, a myriad of solutions breach the market serving this need in the form of non-fungible tokens, NFTs, distributed ledger technology, DLT, and barebone blockchain technology. Neat stuff. Here's another use case surfacing this week. Blockchain is not just for Bitcoin, it can secure and store genomes too. Millions of people seeking insights into their ancestry or information about medical risks have already donated their genetic information to private commercial companies. Whether they know it or not, however, they also have given up control over how that information is used or sold. A new technology dubbed SamChain ensures that individual genomic information remains secure and under control of the individual. Since information cannot be changed once it's stored on blockchains, the technology also protects against occasional corruption of DNA data stored on the cloud, where most genomic information is now stored on far-flung networks of computers. Very nice. And blast from the past, music streaming company Napster to launch its own token on Algorand. The veteran music streaming company has released a white paper outlining the launch of its planned Napster token. Per its white paper, Napster token will be used as a payment method for purchasing music subscriptions, exclusive artist content rights, and accessing premium features of the company's streaming service. Amazing. So at the end of the day, looks like many people are building in this bear market, and many of which are building their cash reserves, waiting for opportune times to jump back into the crypto markets. This headline reads that crypto investors are ready to deploy $25 billion once the bottom is in, according to a quant analyst. Drew says investors have $25 billion worth of stablecoins in exchanges that they can deploy once they are again ready to buy crypto. Stablecoins sitting in exchanges are now worth half of Bitcoin reserves. We have 25 billion loaded bullets, which can make crypto asset prices go up. The question is when, not how. Awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So, how many more dominoes are left that could fall? Is the worst here, around the corner, or several months away? Which use case do you think will drive this next crypto bull market? Let me know in the comments below. Be safe out there.